Hello again, this is Alan Green with Small Cap Spotlight. Commodity prices and oil prices have hardened somewhat this week, and it's fed across into the smaller cap sector. The FTSE AIM 100 has pulled back some of last week's losses and is up 35% now on the year at 5293 as we speak. And this, although it hasn't had quite the impact on the broader based FTSE Small Cap index, which is slightly higher this week, and it's up 17.5% on the year at 5785. So after last week, we've had a few people contacting us about various small cap ideas. So in line with the commodity-driven recovery in small cap sectors, we've got one resource stock for you this week. We've got a pharma stock, and we've also got an IT stock which provides IT solutions, and it's based in Chippenham, Wiltshire. But anyway, to start with, a company called i3 Energy. The EPIC code is I3E. Now, this company was first formed in 2014, and it acquired the Liberator North Sea oil license in 2016, and that license is adjacent to an oil-producing field called Blake. Raised $7.5 million early this year, and it floated in July under the leadership of Neil Carson, who is ex-Ithaca Energy. You may recall Ithaca was sold out recently, and he also worked for BP and Amoco as well. They've contracted OGA and Blake to develop and operate the Blake field, and the latest field data shows an upgrade in the oil resource there from 9.7 million to 11.7 million barrels, which obviously, given the price of oil is currently trading at $58 a barrel, you can do the math on that. The company announced last week that they had secured a $25 million facility to fund the drilling program from two UK lenders familiar with the North Sea, and that's pretty critical when you're looking at an exploration stock like this. Drilling and underway will take place in a few months. Of course, we're nearly at Christmas now, so it's early part of 2018. But despite the resource that the company is sitting on top of, remember it's adjacent to an oil-producing field, it's currently worth just 7 million sterling. The shares have traded so far at a high of 43p on the year, a low of 22 pence, and is currently trading at 28.5p. If you look at the chart, there is 50-day support on the chart at 28.5 pence. So basically, anything above that, or certainly if the stock goes back to retest that, that would be a good point at which to come into the stock. You can expect upward price action, we believe, once drilling commences, and of course that'll be in the early part of next year. Just a comparison on that quickly. Angus Energy, of course, are currently trading and have developed a number of oil wells in southern England. They currently have a market cap of 37 million, and the resource they're sitting on is probably about the same size, if not a bit smaller, than the resource that i3 Energy are sitting on. So, on to our next stock. This was very kindly supplied to us by Jamie Meyer of Ocean Capital Group. He suggested we take a look at the company, so we will do. The company is called N4 Pharma. The EPIC code is N4P. This company is based in Derby. It's formerly called Onzima Ventures, and it raised $1.5 million and floated in May this year. That's May 2017. And what N4P does, rather than push the envelope and develop new drugs, it takes existing drugs in the marketplace and it reformulates them to improve their performance. It has a generics division which includes Sildenafil, better known of course as Viagra, Sartans, Aprepitant, and it also has a number of vaccines including Nuvac and Nuvec. Just on the size of the market that the company is in, the global value of the global nanotech drug market or drug delivery market is estimated to grow from $4.1 billion in 2014 to nearly $12 billion in 2023. The flagship product currently, and this is the one that everyone's talking about, is the Sildenafil, which is commonly known as Viagra, of course, to treat erectile dysfunction. Now, this market is estimated to be in the region of $4.3 million. Last month, N4 Pharma lodged a patent for a faster-acting and longer-lasting version of the drug, which I'm sure will prove very popular. The company have also undertaken some research. A company called Black Swan Analysis found that up to 15% of clinicians working with UK patients would be happy to switch to the new drug, compared to between 20 and 28% of clinicians in the US. So clearly they're very comfortable there's a market to sell straight into there. N4 Pharma have also recently filed 2 new patents, which expands their potential reformulation product pipeline into 5. And the chief exec, Nigel Theobald, believes there are at least 50 drugs coming off patent in the pipeline that could be improved using the N4P platform. All this and the company is just worth 5.7 million. We can see on the chart the shares were traded as high as 12p on the year, just under 5p is the low, currently at 7.75. But you'll see there's a really attractive technical picture on the chart. We've got the 50 and the 100-day moving averages merging around 6.2p. So anything around there, if the stock drops to there, that's got to be solid support. So in summary, it's the company are improving already well-proven drugs there, and really their strategy is a surefire winner. Clearly, given the market for the newly developed version of Viagra, they've got a long way to go going forward. So I said right at the start, coming on to stock number 3, that we'd have an IT stock for you. This was highlighted to me by my colleague Dr. David Paul at Vectorvest, who regularly appears on this channel. The company is called SciSys. The EPI code is SSY. It's an old company. It's founded in 1980, and it provides IT solutions and support services to the space industry, media broadcast, government, defence and commercial sectors. The stock had a fairly flat year up to early this year, where the company completed in December 2016 the acquisition of a company called Anova. And Anova announced earlier this year that it hit a major project milestone on its flagship BBC contract. This was evident in the interims that were announced last month. The interims, in September, showed adjusted operating profit had risen 18%, revenues are up 23% to 27 million. The company had reduced the debt and also boasted of a record half-year order book at 64 million sterling, which is pretty impressive. On the back of that, the company hiked the dividend by 11%. So this is a great signal of confidence to send out to the market. The company said that the full year results will be in line with expected guidance, or at the top end of expected guidance. Going back to Vectorvest's angle on the stock, Vectorvest flagged the stock in the summer when it was trading at £1. The growth earnings and the VST, that's the VST Vector indicators, all logged high ratings for the stock, and cited a valuation of £1.62p. Broker FinCap also has a rating of £1.55p. If we go onto the chart, we can see what I said earlier about the price. Actually, it's had a fairly flat year, and it really exploded into life around the interims. Company's currently worth 37 million, trading £1.26, been as high as 138p, low as 92p on the year. Now, bearing in mind the price targets I've just outlined to you, there's some way to go. And also this is supported by a pretty bullish chart as well. The 50-day moving average has punched through the 200-day moving average, commonly known as the golden cross. Strong support there. And in summary, you've got a company that's where its acquisitions are driving growth, and the company on the back of that is reducing debt. So I think we can expect lots more to come from there. So that summarised the 3 stocks for this week. If you've ideas and thoughts for next week, and I've had a few emails and contacts via Twitter from you, which are very much appreciated, please email the Core Finance team here with your ideas, or go to Brand UK, that's branduk.net, and contact us there. This is Alan Green, signing off for now.